The XRP and SEC saga continues to evolve in a way few could have predicted at the outset. In a joint move that has sent fresh ripples through the crypto community, Ripple Labs and the U.S. Securities and Exchange Commission have once again reached across the aisle, not to battle in court, but to strategically align in a shared request to the Second Circuit Court of Appeals. Their ask? Keep the SEC's appeal on hold for now, and allow time for ongoing proceedings and negotiations to play out in the lower court. This legal pause could mark the calm before the storm or the beginning of the end. At the center of this development is a joint filing requesting the Second Circuit to continue holding the SEC's interlocutory appeal in abeyance. Simply put, they're asking the court to wait, not strike down the appeal, not rule on it, just wait. The SEC has further committed to submitting a status report by August 15, 2025, a move that many legal observers interpret as a meaningful signal that deeper discussions or procedural milestones are expected between now and that date. For Ripple, this request serves a dual purpose. It buys time to potentially negotiate a resolution without the threat of an active appeal hanging over its head. It also reflects confidence in the outcome of the remedies phase, which remains in Judge Annalisa Torres' courtroom. As the SEC has proposed a $2 billion civil penalty for Ripple's past institutional sales of XRP, Ripple has fought back, labeling that figure excessive and inconsistent with previous enforcement actions. The abeyance gives both sides the breathing room to settle those numbers or prepare for the next courtroom clash. Legal analysts and crypto attorneys are already weighing in. John Deaton, Bill Morgan, and other legal minds familiar with the case have suggested that this joint action is not just procedural, it's strategic. When two adversaries jointly petition an appellate court for a delay, it signals either a truce in progress or a recalibration of battle plans. The SEC may be reassessing the strength of its appeal in light of its partial victory and partial defeat at the district level. Meanwhile, Ripple continues expanding its global operations and partnerships, seizing every opportunity to normalize XRP as a cross-border liquidity solution despite the looming uncertainty. The August 15th status update is now circled in red on every crypto investor's calendar. That report will be the most direct public window into what's happening behind the scenes. Is a settlement close? Is the SEC preparing to drop the appeal? Or are we witnessing the careful choreography of legal theater before the next escalation? Zooming out, the implications are massive. The outcome of this case could set precedent for how crypto assets are classified in the U.S. If XRP ultimately receives judicial clarity as not being a security, particularly in secondary market sales, it opens the door for greater institutional engagement, listings on major exchanges, and broader utility. It also weakens the SEC's hand in pursuing similar cases against other digital assets. But what if the pause ends with the SEC pushing forward on appeal? That would mean more months, possibly years of litigation. For Ripple, that's a cost of doing business. But for XRP holders and crypto innovators in the US, it's continued uncertainty. The fact that the SEC hasn't immediately pressed the appellate court for action suggests hesitation, or at the very least, the need for more internal alignment within the agency. In the meantime, Ripple is showing no signs of slowing down. On-demand liquidity corridors are expanding, real-world asset tokenization pilots are ongoing, and central bank partnerships are quietly taking shape. XRP continues to serve as the bridge asset Ripple envisioned, especially outside the US where regulatory clarity has already been granted. With every passing month, Ripple becomes less dependent on the US market, even as it continues to fight for its right to operate there. This most recent filing underscores one fundamental truth. The Ripple SEC case is no longer just a legal issue. It's a geopolitical, financial, and technological flashpoint. The world is watching. Investors are waiting. And the future of US crypto regulation may hinge on what happens next. One thing is certain: come August 15th, the next chapter in this historic battle will be revealed. Whether it signals resolution or reignites the fire, XRP's role in the global financial system stands to change forever. The number of daily active wallets on the XRP ledger has jumped sevenfold, and this isn't spam traffic or bot activity. This is wallet growth backed by actual transaction volume, micro remittances, token movement, NFT minting, and more. Developers are building, users are engaging, and the network is breathing with real adoption. From Latin America to Southeast Asia, small fintechs and massive institutions alike are integrating RippleNet's on-demand liquidity, quietly introducing XRP to millions who have never interacted with it before. That surge in user activity is the natural result of years of back-end development now reaching the surface. But now, let's talk about the whales because this is where it gets serious. According to the latest data, wallets holding over 10 million XRP have hit an all-time high. These aren't weekend traders or Telegram group gamblers. These are strategic players, deep-pocketed institutions, and high-net-worth individuals who are loading up not for a quick flip, but for long-term exposure to a system they believe is about to be plugged into the global financial grid. And why would they do that now? Because with the SEC case nearly behind us, XRP has moved from the courtroom to the boardroom. Regulatory clarity has opened the floodgates for custody services, institutional settlement, and even government interest in Ripple's technology. And whales, they don't FOMO into coins based on hype. They accumulate in silence during uncertainty. Then they reap the rewards when clarity arrives. The sudden rise in whale wallets isn't just impressive, it's a signal that it means that the people with the most to lose and the most tools to analyze risk are betting big on XRP's future. And if they're right, we are looking at an ecosystem that's about to shift from underdog status to global infrastructure layer. Now pair that with a seven-fold increase in daily activity. That's not a blip. That's a network effect kicking into high gear. It's the kind of growth curve we've only seen before during the early days of Ethereum when dApps started exploding and the world realized ETH wasn't just programmable money, it was programmable finance. XRP is now entering that same phase, but with a crucial difference. It was built for utility from day one. It's not trying to find a purpose after popularity, it's had a purpose for over a decade, and now the world is finally ready for it. So what does this mean for investors? It means the clock is ticking, because when user growth and whale accumulation converge, it's usually just a matter of time before price follows. The math is simple. Increased usage drives increased demand. And when demand meets fixed supply, as XRP's escrow-controlled structure guarantees, the only place for price to go is up. And let's be clear, we're not talking about a 10% pump, that we're talking about the kind of supply shock that could send XRP well beyond its previous all-time high, especially as Ripple expands its payment rails into Japan, Africa, South America, and the US financial sector, with central banks testing RippleNet for real-world settlement. This is no longer about if XRP succeeds. It's about how big it gets and how fast, because seven-fold user growth in a matter of weeks? That's not just momentum. That's inevitability building pressure. So while most people are still looking backwards, talking about SEC headlines and 2018 price peaks, the people who matter, the builders, the whales, the institutions, are looking forward. And what they see on the horizon is nothing short of a transformation in how value moves across borders, across platforms, across economies.